Yeah. Hello, can you guys hear me? Okay, perfect, guys. I'm not having any luck with these headsets, man. It's freaking expensive for nothing. Okay, so I, right, so just bear with me, guys, because they don't seem to be actually working. So what I'll do, I'll need to continue using this because it doesn't eliminate any of the background noise. That's probably using the computer as the speaker. So that's why I usually use these headphones. Okay, but let's get back into it, guys. As I was saying, your trading goals is an essential part of you actually trading, and they provide a beacon. So these are just your guidelines, right? So the things that you want to achieve within your trading. Okay. Now, firstly, what are your annual trading goals? Now, that's a big picture. Think in terms of the skills and knowledge that you want to acquire between now and this time next year. So you put this as a long stretch instead of as sort of like a sprint. Okay, so you want this to be as long-term bias as possible. So you'll be able to see and project where you are. Because if in effect take trading as a day-to-day thing, then you're definitely bound to fail. But if you look at it as a long-term investment, then every now and then if you have a bad trading day, and everyone does have a bad trading day, no matter who they are and how much experience they have, then you'll be able to bounce back because you understand that trading is a long-term game. Okay, and inevitable drawdowns and stops getting hit, all of that stuff really won't bother you because you understand that the main objective or the bigger goal is to achieve a certain percentage annual trading return. Okay. Now, you're going to put it or phrase it in this sense. I expect to achieve these goals because, in addition to the coaching, I read this, okay? It's a trader magazine or whatever, and study the words of wisdom from more experienced members of this would be a forum, okay? And when I achieve my goal, I will reward myself with a 2 week family holiday in somewhere in Andalusia. I think one person know where that is actually, okay, because they spoke to me about this. But you say you might enjoy that, or you might spoil yourself, buy yourself. If your account is still relatively smaller, you might buy yourself a pair of sneakers. That's something that you can. It's tangible, it's there, and I promise you, it will actually make you go. All right, now this forex thing really does work, and you will go 10 times harder to ensure that each and every time. I'm not saying go and blow your account and sneak now, but if you manage to make $1,000 in a month, right? That's roughly 14 grand, 15 grand, okay, depending on the exchange rate. Go out and buy a nice pair of sneakers, 1.5 or 2 grand or something like that. And that's really going to motivate you because every time you look down, you see, okay, this is what trading can actually achieve. All right, you don't need to make 500 million rand or something like that for you to actually reward yourself. You can start with something small, even a nice watch. All right, buy yourself a nice watch. Doesn't have to be expensive, but it needs to be something that you look at and say, okay, this trading thing is real. I've managed to actually make money from it, and that's why I'll continue to work hard at it. Okay, so then you define those annual goals. Okay, guys, can you hear me? Is the sound still the same level, or what's? Is it okay? Hello. Okay, all right, perfect. I think you might have to log out and basically log back in. Because it seems like everyone. Yeah, I think I just keep on dozing off or something like that. It's been a long day. I'm usually up and down, so Today I'm actually sitting down, so I think that's why my voice isn't projecting as usual, but I'll try and pick it up, guys. Okay. Okay. Now, then secondly, what are your actual monthly trading goals? Okay. Now, define your monthly trading goals again. Avoid financial targets as much as possible, and you need to say, okay, how much or how will you achieve these goals, and how will you actually reward yourself when you do achieve these goals? Because it's one thing to say, okay, I'm going to achieve this because I'm going to make this much money. Okay. It's something entirely different when you actually attach something to that financial target, to that financial goal. Okay, I'm going to make 10 million rand because I want to buy myself a, I don't know how much jets are. You know, I want to buy myself half a jet or something like that, right? So that's basically something tangible that you attach your goal to, and now you know each and every month that is something that you're actually working towards, right? Now you'd say my monthly trade. Okay, my monthly trading goal is to achieve, let's say, 10% of your account. Okay, now you want to achieve consistent profitability each and every month with a success rate of 2:1 or more, and a Sharpe ratio of 5:1 or more, and expect to achieve these goals because, let's say, I review my performance on a daily, weekly, monthly basis and quickly spot any problems, because starting out you are going to have problems. That is 110% guaranteed. And so should they occur, you'll be able to spot them much quicker than someone who's going to say, okay, what am I doing wrong? Sit down and think about it, and not actually look at the account history or look at the previous trades that they actually did take. Right. It's one thing just to sit around and think, okay, what am I doing wrong? Right. Or what can I do better? Than to actually look at your account history, trading history, and just take notes on your performance. Okay. Now you say, when I achieve this, I always like this part. When you achieve this, you reward yourself by such and such and such. Okay, you're gonna buy yourself this, buy yourself a water bottle, anything. Now, what are your weekly target or trading goals? Now, it's you need to define, because you see we started off on a larger scale, annual, monthly, weekly, and then you're gonna have your last set of goals, which is gonna be daily. Okay, now I prefer weekly goals over daily goals. However, depending on the way you trade, okay, if you're going to be a scalper, obviously then you can have daily goals. But if you're going to be a swing trader, you can have weekly goals. Position traders obviously have monthly goals. Right. Now, weekly trading goals, how will you achieve them, and how will you reward yourself when you do that? So my weekly trading goal is to, um, when I trade each and every day of the week in accordance with my trading plan. And this will entail me taking my stops instantly. So that means you don't move your stop loss if you see the market going against you. You're like, okay, it's going to rise now. Let me just move my stop to give it a bit of more wiggle room, and sticking to my risk and money management strategy. So if you set in your strategy or your trading plan, you're going to only risk 1% of the account. You're only going to risk that 1% of your account. You don't increase it because you have 2 good trades or 3 good trades, and all of a sudden now I'm good. Now I can spot M's and W's on my master at this. Then you increase your lot sizing, and that basically messes with your whole game plan, right? So following the exit criteria and devoting most of my time to searching for the new trade and choosing only the very best setup. So the exit criteria would be, how do I get out of the trade? If you're swing trading, you're trailing your stop loss. Okay, stop loss goes above your entry point if you're buying, and then you continually just move it up. So as the market shifts, okay, as the market heads up at this swing, you just take a stop loss, you put it here, you put these profits, you take it, put it here, you put these, and you take it here, you put these. So that can last a couple of months, that can last a couple of weeks. But that basically means your exit criteria is when the market pulls back, hits your trailing stop, and you book all of these pips make all of this money on the way up instead of you just taking the mandatory 50 pips, right? So that is your exit criteria, the way that you're going to be getting out of the trade. Okay, now when you achieve this, you will actually have to pat yourself on the back. So if you did trade every day of the week in accordance to your trading plan, okay, you look at your plan each and every day. All right, you review, did I follow that trading plan? Okay, yes, I did. I took very good setups. All right, yes, I did. You reward yourself. Whether or not you made $100 or $500 or $1,000 doesn't really matter. But if you did actually follow that exit criteria and every single thing that you actually did detail in your trading plan, then you should then reward yourself. All right. All right. Now, which markets are you then actually going to trade? Right. So, in a sense, this can be because we do trade indices, we do trade commodities, we do mostly though forex, and some trade binary options as well. So you need to define which markets you are going to trade on that particular platform. So you decide upon the market you wish to trade, the instruments that are available within that market, and the reasons or the choice for the choices that you do make. Now, as a general rule, professional traders tend to restrict their focus to a limited number of markets and instruments. By contrast, ironically, novice traders tend to trade index futures one day, currency pairs the next day, and exotics, sounding commodities, and they basically try to trade every single thing. So what I do always suggest, be an expert. If you're going to trade only Aussie dollar, Euro dollar, and GBP Aussie dollar, then you just focus and hone all your energy towards that. You know the news, you know the structure, and you know the amount of pips that it averages on a daily basis. And instead of you jumping from this currency pair to that currency pair, I know some guys will post something different in the group, and some people get excited like, okay, now I see Aussie CAD. Let me just jump in and look what Aussie CAD is actually doing. Although it's not in your trading plan, it's just to help you to see how the setups actually look. Now you're going to start to include the Aussie CAD in your trading plan and you start trading that. Then by the time you know it, you're watching 12 markets and you're completely overwhelmed. Because if you're looking at more than 7 or 8, then I promise you, you're going to become overwhelmed, especially when it comes time for analysis. You're analyzing 12, 15 currency pairs. And by the time you finished with the 15th currency pair, the first one's setup is already left. Now you need to chase something else to try to get back whatever you lost, right? Okay, so now with the instruments that you're going to be trading, you say, okay, the instruments that I'll trade are obviously in Forex, okay, spot Forex, USD CAD, I'm going to trade Euro USD, I'm going to trade USD JPY, and I'm going to trade USD CHF. Those are the major currency pairs, right? So US stocks in the evening, after work, because opportunities exist 7 to 9 p.m. session. So you're just going to say, okay, now since I work, I'm going to be trading mostly the US session. So most of the currency pairs that I'm going to be trading are US based, right? Because US session ends at 11 p.m. So they're going to be US based. So I'm going to be trading all those dollar majors, right? Because they also provide high liquidity as well. And there's some volatility within that market. Okay, the New York session can be very aggressive, and hence you'll be able to trade during that time. Right now, if you're a swing trader, then you say, okay, I'm going to be trading end of the day only. So I only wait for the candle on the daily time frame to close. So I'm trading the dead gap. So after the market has closed for the New York session, only then will I actually come through to my platform, look at opportunities, and if nothing is present, then I just close it again. All right. Okay, guys. Right now, you need to select as well which time frames you are going to trade. Hopefully, you decided what sort of trader you are. So if you're a scalper, You're going to be looking at mostly your 4 hour, your 1 hour, and your 15 minutes. Right. Now, as a position trader, position traders will look at the monthly and the weekly. You might have a look at the daily time frame for your entries. And as a short-term swing trader, you might look at your daily and your 4 hour. You might have a 1 hour candle confirmation as well set up. Right. So you decide which time frames will you trade, because if you try to look at the monthly, weekly, daily, 4 hour, 1 hour, 1 minute, there's even a 2 minute, I think, on some platforms. So you're looking at all those time frames. Obviously, they're going to conflict in some way or the other. One might be a huge downtrend, other might be a strong uptrend on the 1 minute time frame. So that can lead to a lot of frustration. So if you want to become an intraday swing trader or a position trader, now you need to focus in on your time frames within the category of your choice. So swing traders, as I've already mentioned, look at particular time frames. Position traders, intraday traders, they focus on entirely different time frame. You can't take a trade on a monthly or a weekly time frame and then go to a 15-minute time frame and try to manage that trade, or try to look at, all right, where should I take my profits? You're looking at it on the 15 minutes. 15 minutes is not relevant for you if you're position trading and waiting for trades to actually hit the take profits after, let's say, 1,000 pips, 2,000 pips, or 3,000 pips. You understand? Okay. So you must also understand why you actually use them. Okay, very clear in your mind that these are the 3 or 4, well, I'd rather say 3 time frames that I look at. And if I have a good setup, then I just take it. Right. I don't look at any other time frame which will actually contradict to my overall bias of the market. Right. Now, for the guys who do hold positions, let's say short-term swing traders, let's say you want to hold it for 3, 4, 5 days, or perhaps a week or two, then you analyzing on a monthly or a weekly does give you a better understanding of the overall directional bias of the market. Right. I'll do that in the swing trader session. I think I did touch on it, but hopefully I'll get time. Just remind you guys to include it in one of the sessions. Right. Okay. Now, as you would with the normal JOB, don't want to say the word. What you want to happen is you need to have an preparation. Okay, you need to be prepped up. Before you go to work, obviously you wake up, brush your teeth, take a shower, start the car, you ride to work, or you eat breakfast before that, hopefully. So you do all of those things before that. You get to work and you start working. Okay, so you sit down, open your workstation, or if you're out in the field, then there's certain things that you need to do. Let's say if you're working construction, obviously you need to have your safety kit. So you wear all of that to make sure everything is working perfectly, and then you actually start. So to begin trading without doing the actual homework beforehand is sort of like embarking on a car journey without checking the oil, fuels, and before you actually set off. So it is essential to undergo a daily pre-market routine that ensures that you are well prepared for trading ahead and there are no surprises. Because sometimes if you don't look at the previous day or what's going to be happening within that particular day, for instance, you might not be aware that there's French elections. The last day is actually today, and you trade the Euro USD going short, and all of a sudden the Euro USD turns back up and just rockets up 2,000 pips or 1,000 pips. So you need to know what's actually going on and do proper pre-market routine. Okay, let me take you guys through that for now. Now, you need to understand what is your daily pre-market routine. Now, as the question implies, these are the things that you do each and every day to ensure that when it's time to pull the trigger, when you need to take that trade, execute, the probable outcome is in my favor. So you're just stacking your odds in your favor for you to be able to make a profitable trade. Now, my daily routine, or pre-market routine rather, comprises of 5 key elements, namely to analyze and log yesterday's trades, very important, to review any open positions and update targets, 3, to assess today's market conditions and plan accordingly. And 4, to plan the day ahead, hour by hour. And 5, to make an initial selection of possible instruments to trade. Take you through that again. So the first one, you want to analyze and log yesterday's trades. I took USD CAD. I went short at this level and the trade didn't pay out. You take a snapshot, you take a photo of it. Stock was hit, lost 25 pips, so you log that, right? And reason for that, okay, I didn't wait for confirmation. There was news that I didn't know about. That's basically logged. It's in there. You know what happened. Okay, now to review any open positions and update targets. So if you have a position running, let's say it's an open positive float and you want to keep trailing it. So you update that, you take your stop loss, you put it above your take profit, your entry point, and you just continually trail that particular position upwards. Right. Now 3 is to assess today's market conditions and plan accordingly, meaning how volatile is the market at this stage. If there's a financial crisis, the market has crashed the previous day, obviously the market will be a bit intense. Or if it's during December time, some of you know there was spreads 38 pips, 40 pips, 29 pips. I think the EU was 20 something pips in the AU. So you need to actually analyze today's market conditions and plan accordingly. And the fourth one, to play the day ahead, hour by hour. So okay, at 8, I'm going to check on the charts. Okay, if you're intraday trading, at 8, I'm going to check on the charts. At 9, I'm going to have a look again. At 10, right? So not meaning that you need to check each and every hour, right? But you need to have a hour by hour account of what you are doing within that particular trading day. So if you say at 8 I do this, at 9 I do that, at 11 I do this, and at 12 I do that. So it's basically planned out. You have it there, it's written down, or you just put it in your smartphone. Then you know instinctively, or you know at a certain time, this is what I'm supposed to be doing. I'm supposed to be doing analysis. Okay, I'm supposed to be reviewing my positions, and I'm supposed to be just managing all my trades that I actually do have. Right, and lastly, then to make an initial selection of possible instruments to trade. So I usually just trade. I just put those lines in, and I put the box with the alert zone. And once the market closes in that box, it basically gives me an alert. Okay, something just popped up, then I have a look at it. If it's worthwhile, take the trade. If it's not, then I just let it be, or just let the trade develop into something I want to take. All right, so that would be a normal daily pre-market routine. It doesn't need to be, this doesn't take a long time, by the way. This can take anywhere between 5 to 10 minutes, depending on how consistent you do it. And once you're done with that, then you can just head on to the trading stage. All right, now this is for me one very important part because if you haven't analyzed yesterday's trade, that simply means that you don't know what worked and what didn't. Now, have you completed your analysis of yesterday's trades, logged them, and updated your journal? Yes, so everyone should have a journal. If you've gone through the advanced sessions, I've done that numerous times now. Did you adhere to your plan? And if not, what are the facts? Okay, that have actually filtered onto today's trading because of that. Now, in other words, your ability or otherwise to stick to your trading plan yesterday should determine your trading activity today. Okay, so like I said, it filters what you did yesterday will filter on what you're going to be doing today. Now, each day, I ensure that yesterday's trades are analyzed and logged, and that my trading journal is up to date. It's a quick process, guys. It takes less than 5 minutes. Additionally, I'll check to ensure that I adhere to all aspects of my trade. That's it. You're done with analyzing yesterday's trade. Right. Any questions on that, guys? Anything you don't understand regarding that? Okay, guys, we're still on the same page. All right, perfect. Oh, good, oh, good. All right, awesome stuff. Okay, so this is also very important. Don't forget the trades that you do have run. So you look at and you analyze your open trades. If it's not clearly laid out in your plan to hold positions overnight, don't actually do that. So if you are an intraday trader and the market is about to close, you just close all your trades. Right? If you're a swing trader or position trader, then you may actually have trades, well, you should have trades open overnight. So if I have positions open in the market, I will update targets and stop losses and confirm that the reason for entering the trade in the first place are still valid. So if you enter on a W formation, the trade closes below that, it extends. This is no longer a perfect W formation. It closed below your entry point, and now the seems to be. Okay, let's do this. Okay, now the market you expect it to go up, but it's invalidated because the market closed below the W formation. So that trade is no longer valid. All right, so you then obviously close the position. All right, so what are the general market conditions? Now, is there any major news stories impacting the markets? And if you're trading index futures, especially because those are more sensitive to price, to fundamental aspects of the market. Yeah. So what are the index futures doing? They can also lead currency pairs as well. Sometimes you might find the Nasdaq dropping will actually influence the US dollar as well weakening. Right. Now, are there any key fundamental economic reports due out, NFP perhaps, at a certain time? Right, so you need to know NFP 230. It's coming out this week or on the first week of each and every month. And this is what it does, and this is how my outlook is on it. So before trading, you can check one of the websites, FX Street, Forex Factory. So I just put these two up because those are the ones that I'm aware of. Well, most of the time, I'd say more than 80% of the time I use FX Street. It's very simple, plus you get bulk of the info there. All right. Okay. And lastly, what will you be doing hour by hour? So if you don't plan each day hour by hour, chances are you're just gonna drift through your trading. You'll only trade when you have time or when you feel like it, or when you feel good, or when you want to feel like a big shot on the market. You know, so that will ensure that you stay a small time trader. If you want to become a big time trader and someone who can actually manage like reasonably sized accounts, then you definitely need to plan your day hour by hour, right? So you don't end up in the whole drift staring at the charts without any hope of taking a trade or something like that, because this can actually suck you in and it becomes very tedious task. And every time you wake up, you think, oh man, I gotta analyze the markets. You have 20 charts open up, and you don't know where to start. So just try to keep things trimmed, simple, and structured. So once you actually achieve that, trading should be like clockwork. You go in, you know what to do, you know what time, how long it takes, 5, 10, 15 minutes, you're done with your pre-market routine. Yeah, you check the news. That might take you an additional 4 to 5 minutes, a total of 20 minutes now. And you start with your analysis. While you review your analysis, is everything still valid? All of my positions, what do I have, and what happened yesterday? Okay, so what percentage did I achieve yesterday? Okay, so target is still at this much. So then you go on with your regular day start trading. Right. So you highlight all the trades that you're going to be looking at. Let's say you're watching 4 currency pairs and one is setting up profit. So you take that trade, you leave it, and you set a time. All right, in 2 hours time, I'll check on the trade how it's doing. That's it. Or you put a trailing stop. Right. So this could result in missed opportunities, or we're still departing from a trading plan and taking important trades, which I'm sure everyone who's actually traded live has taken a important trade. You're not doing anything. The market isn't really moving. You're like, okay, I need to have something on there. Right? You just take a trade, small lot size perhaps, and it ends up as a huge loser. Okay, just because you bought, you don't know what to do with yourself, and market isn't doing much. Right now, providing structure to the day encourages discipline, maintains focus, and ensures that your work time is used to maximum effect. Because if you don't maximize your work time, your trading will seem like a tedious task, a very long one at that. You feel like you've been trading for 8 hours when you've been trading for only 1 or 2 hours. Right. So you just essentially want to maximize on your time and take breaks in between if you are trading. Okay. There is no better time to actually open the trade. If you swing trading though, if you're gonna be a swing trader or position trader, the best time is end of the day, right? So after 11 p.m. That's the best time. But if you're trading intraday, there is no real time there. You're trading within those two sessions, London or New York session, right? So you can have trades set up there at any time. If you are working, you can't really watch those. You can only trade New York session, which is why I say you should adopt something that's gonna fit comfortably within your schedule. Right. So if your schedule allows you to sit in front of the charts the entire day, then by all means you can do it. But if not, you just trade end of the day or end of the week. Sorry, end of the day trade. All right. Any questions, guys? I think we have less than 5 minutes. Okay. So you're not sure about the time. Oh, it's clear now. Okay, I thought you said it. All right, guys. So if there are no other questions, I will end off today's session here. All right. Okay. Sorry about that. Network must be terrible, or it's just these headsets. I still got them on. I'm not even sure if they're working. I'll have to return that. So if there's no other questions, guys, I'll end off the session here, and I will try and post this as well in the advanced part of the student forum. Okay. Okay. A good trading plan is something that fits into you. Right. You see everything that I just gave you now. That's essentially what you should be looking at within yourself. All right. The recording, I will post up the recording so you can go over everything if there's some parts that you did miss out on. I did have a trading. Okay. Just drop me a WhatsApp message and then I'll add you onto the advanced course. Right. So the guys who are already advanced, I'll add them to the advanced course. But if you're still beginner, now can add you to the beginner, and intermediate will jump on the beginner and the intermediate part. Okay, I'll try and drop in a trading plan, a sample one that one of the guys did. They have it, they sent it by email to me. So you can just have a look at that. So once you're done with that, you can just drop that to me via email. I'll leave my email address right there. All right, so that's a new email address. I'll even drop it on the WhatsApp group. Like I said, guys, a few weeks ago, that my previous email address now has officially been closed. I closed that one, so I'm only using this one. So every single thing that we do, just drop it on this one. And all right, okay, awesome. All right, thanks, then, guys. For the rest of your evening, and I'll be on WhatsApp for the next hour or two. Right. All right then. Cheers. All right. Welcome, guys. Thanks for coming through.